All right, so Realty Income is one of the, if not the most popular stocks in the real estate sector. It's a company, I mean, let's just get right into it here and read exactly. Realty Income, real estate company which engages in generating dependable monthly cash dividends from a consistent and predictable level of cash flow from operations. Firm is engaged in acquiring and managing single-unit freestanding commercial properties under a long-term net lease agreement with its commercial clients. It owns and operates a diversified portfolio of 11,400 properties. So again, it operates properties, right? And if we're looking into specific kinds of properties, we're comparing like Walgreens, CVX, 7-Eleven, Kroger, these kind of, Walmart, I think is in there, is pretty common as well. So my quick thoughts on this company is, as far as a real estate stock goes, it's a REIT, but it's fairly safe for a real estate stock. But on the flip side, I think it's going to have trouble outperforming the market over the long run. And if I'm buying a company, I want to buy it assuming I'm going to outperform the market, right? Because if you're just going to keep pace or not even keep pace, you might as well just buy an index, right? And again, if we're comparing it to a real estate index or the S&P, I would be surprised if this company didn't come close to keeping up, but I would also be very surprised if it outperformed it by a significant amount, right? Because, and if we're just getting right into it here, let's get right into it. The first problem I see is that it's diluting quite a bit, which from what I can tell, most real estate companies do dilute, but it's diluting by quite a bit. The payout ratio is getting high, but on the flip side, this is a company that's raised its dividend through the '08 crisis, through the dot-com bubble. So I don't think that it's in danger of cutting its dividend or not raising its dividend. But on the flip side, it's like they could just lower the amount that they're raising it. Analysts are fairly bullish on this company. The growth is the most impressive thing of this company. The FFO is growing very nicely, which is the main thing you're concerned about when it comes to real estate or REITs in general. But again, they're diluting quite a bit, which is concerning to say the least. If we look at other things here, the returns aren't very good, right? I mean, they're safe, but on the flip side, they're also not going to do anything significant, right? If we get into the valuations here, price to FFO is quite a bit below the historical 5-year average, which means if you're going to buy, now is probably a good time. Again, do your own research, all that kind of stuff. But if you're looking at it compared to an average valuation, it is looking very good. But again, we also have to consider this company's only grown 17% in the last 5 years, and it is down over the last 3 years. Since 2011, it's hasn't even came close to keeping up with the S&P. If you include dividends, it's not that far off, which you obviously should for a company like this. If we get into the financials here, the one thing that's very good to see is the FFO growth here. Again, consistently going up year after year after year. So that's very good to see. But again, if you get into the shares, they are diluting quite a bit, right? So that's a concerning thing to see. If we look at its metrics, again, they're decent. Nothing to worry about there as far as the metrics go, in my opinion. They're only growing the dividend by about 3.19% per year over the last 5 years. So the main reason people buy this company is, they're the company that's grown its dividend for like almost 30 years straight, I think. The problem with that is that they're barely growing it, right? I mean, if you go back 10 years, you have like I don't even know if you have a 6% yield on cost. Let's see here. It's not showing up, but again, it's growing its dividend every year, but it's hardly growing it, right? So the question is Realty Income the best real estate sector stock? I would say no for sure. Is it the safest? Probably it's one of the safest, because if they can get through the dot-com bubble, if they can get through '08, without not raising the dividend, then I would be very surprised if any future crash they can't make it through without raising the dividend. The concerning thing in my mind, though, is that they're increasing their shares outstanding. Profitability is not great. Oh, sorry, profitability is good, but the returns aren't very good, right? So the profitability is good, but the returns aren't very good either. But again, a lot of real estate companies, they're not great, at least compared to your average stock. The growth is something that I see is very nice, right? So you look at the payout ratio, it's getting pretty high at just over 80%, which is definitely concerning, but they are growing very well, right? The problem is, again, the shares and the fact that I just don't see this company outperforming the market as a whole, even a real estate index, right? It's going to help hedge on the downside, but the upside is also fairly limited, right? And another very concerning thing that I also noticed is they still haven't reached their 2020 highs, right? They got up to about, I think it was about $78 a share. The highest they've gotten since then, I think, is around 76 roughly. Let's see. I think it's in the low to mid 70s. So they still haven't got back to that amount, which, again, if you go back throughout history, I mean, they've consistently made higher highs and higher lows, right? But if you go back over the last few years, that's not the case. So that's something that's pretty concerning to me, in that why are they not growing, right? Why is the share price not growing, right? The argument against that would be, okay, well, the FFO is still consistently getting better. And I do think that they will reach that high again. The problem is that, I mean, if you look at its growth from like the early 2000s to 2020, it grew fairly nice, actually. But if you look at it over the last few years, it hasn't done a whole lot, right? It really hasn't done a whole lot. And that's something that's concerning to me, right? That's something that's really concerning to me. I currently do not own any realty income, although I do think that it's getting to the point to where I think you could look at buying. It did dip below $60 recently. If it goes below $60 again, I probably would pick some up. Again, my opinion, do your own due diligence. But again, if we go into the free form here, let's take a look at that, if it'll load. So again, if we pull up the price to book, price to operating cash flow, I don't think price to FFO will pull up. But let's just go back like 10 years here. If we look at the average, price to operating cash flow, average of 20. The latest is 17. And the lowest it's ever gotten was just below 14. Looks like that was in 2020. Everyone knows what happened there. Price to book is near its low as well. So like I said, it looks like honestly, like this is actually pretty consistent here. If it goes below about 16 on a price to operating cash flow, almost always that looks like it's been a good buy. Like every single time it's gone below that, it looks like it was a good buy, at least from what I can tell. And it's near that right now. It's at about just below 18. It did dip below that in September, it looks like, or sorry, October. So again, if it can get to around $60 a share, in my opinion, it would be a buy, right? Because if you can get it for those valuations, it's always been a good deal. Once it goes above about 24, looks like it's been a time to sell. Again, if you'd have sold it before then, that'd have been the perfect time. So again, if you're looking for a price to buy, in my opinion, it's going to be around 60, although I don't think it's a terrible price right now. But again, I think that this is a company that the downside is somewhat limited, but the upside is also limited as well. I want to buy stocks that I'm confident that can outperform the market, and this is one that I think that you're probably looking at keeping up with the market to be the best case scenario, and that's a reason that it doesn't make me super excited about it. So Anyway, that's what my thoughts on realty income. If you like the video, hit that like and subscribe, and stay tuned for more.